Lately, it has been pretty crazy for both crypto and growth stock market investors. And on today's episode, I am going to take a look at what I believe is the biggest mistake new investors can do at a time like this. And I'm also going to take a look at 3 tips that I believe can help us from not making this mistake. Now let's get started. So like I mentioned, right, it has been pretty crazy for both crypto and growth stocks investors in the past 24 hours, mainly for crypto investors. We can see some of the big coins like Bitcoin down 13-14% in the past 24 hours. Ethereum is down 19.9, XRP is down 22%, Doge is down about 18% in the past 24 hours. Now if we take a look at ARK, for example, for growth stock investors, this ETF, which mainly focuses on highly innovative growth stock, is down about 34.68% from its all-time highs. And we can see it's just continuing to drop today. It's not as bad as crypto, but we are down about 2.4%. So the biggest mistakes I believe new investors can make right now is what I call emotional investing or emotional trading. And emotional trading works either when the stock prices are going up pretty fast and everybody gets super excited, so they continue to add more, kind of fearing missing out on those gains, or when stock prices drop down really fast and investors tend to get very fearful and they start to sell off because they get scared, right? So this is emotional. It's emotions affecting the way you invest. And I think as long-term investors, that's the worst thing you can do, right? And let me say, if right now you are feeling like your stomach is twisted, if you just can't stop thinking about the price action, if you're just constantly looking at your application right now, you might be a little bit too heavy in a position. I'm going to share some of those tips. But first, right, it happens, right? Especially for new investors. Mistakes happen. I've made mistakes throughout my whole investment process, but the only thing that we can do from it is learn from them, right? And some of these tips that I'm about to give are probably, most people are going to be like, yes, Jose, hindsight is 2020. But the thing is, things like this are going to happen again. Maybe not next month, maybe not next year, but maybe in 2 years from now, we might see some crazy corrections in both growth stocks and in both cryptocurrency as well, maybe even next month, right? So what we have, even though it might be hindsight for now, these are experiences we can learn from for the future. So now the first tip to control us from emotional trading is not being overexposed. And what is overexposed? Overexposed is pretty much when you probably have too much of your money into either one type of asset or just one actual asset. So a great way is to kind of diversify until you no longer feel overexposed. And I do believe that overexposure is different for every investor. That's why there is no magic number, right? Maybe what works for you won't work for me. For me, I personally don't like having one of my single positions ever being more than maybe 15-20% of my portfolio. Maybe you might feel otherwise. Maybe you don't mind having something 30 to 40%. That's your limit. So the first thing is understanding what's your limit. For me, right, I like I mentioned, I am very heavy in growth stocks. I'm pretty down from my all-time highs. I want to say we've seen some of my growth stocks are down probably even 40-50% from their all-time highs when I had some great returns. But I am not overexposed into not only growth stocks. I personally have plenty of cash outside of my portfolio, so this allows me not to overtrade. And before I take a look at tip number 2, make sure to hit the subscribe button, make sure to hit the thumbs up. It really does help with the overall channel. And my overall goal is just to help investors get better over time, right? Like I said, I've been learning this for the past 7 years, and I'm continuing to learn. And I wish when I first started investing, there was someone making YouTube videos like I am right now. Tip number 2 is do not borrow others' conviction. And this is, I feel, something new investors tend to do a lot. They see maybe some great investor or some investor they kind of idolize, invest in a stock, invest in a crypto coin. So because that one investor has invested in it, you go out and buy it. But unfortunately, they have some form of conviction. They've done their due diligence. So when stock prices turn to drop, usually don't blink an eye. I've seen it pretty much right here on my YouTube channel. I talk about a lot of stocks. Some of the stocks I invest in, right, they dropped, like I mentioned, they have dropped a lot. I have yet to blink an eye. I have yet to sell any of my major conviction stocks. But what I normally see in the comments is, Jose, I'm worried that this stock you mentioned 2 months ago is down. I mean, you need to do your own due diligence. Again, not just in YouTube, in other investors in cryptos. understanding what you're investing really helps out when stock prices or assets of cryptocurrencies or any other type of assets drop down, because it tells you why you are invested. And if the only thing that has changed right now is the stock price and none of the fundamentals, if your thesis is still intact, why worry about the overall price movements? Number three, I would say, is not understanding the risk, right? Or not having a plan. Whenever I invest in a company, I always understand what are the risks. Yes, the stock price can go down a nice amount. What are some of the competitors? Understanding what can really destroy your overall thesis, and have some kind of plan behind it. Let's say you have some plan. Hey, I invested in this asset, I invested in this coin, I invested in this stock. If this stock no longer grows its revenue at this levels, if this crypto no longer works with this type of project, then I would sell. So having a plan can really help out during times like this and can really help out control your emotions. Sometimes you also see people who have a plan don't stick to their plan. So I want to say some investors, especially in the stock market world, I see, hey, they buy into a stock, they have a plan, but then the stock prices drops and it really they changed their plan completely. I believe having a plan before you enter and sticking to that plan, not changing it just because the overall price action is not working in your ways, right? It's not working in your favors. So having a plan and understanding the risk. And like I mentioned earlier on this episode, most of these tips are probably too late for this time. And maybe you might be lucky. Maybe it's not too late for this time. But I do want to say is remember how you're feeling right now, because that is the experience that's going to help you become a better investor in the future. So I do end up seeing like a lot of people start feeling this. They were like, oh yes, I'm overexposed. I'm not going to be overexposed next time. Oh yes, I'm gonna have a plan. Right now I didn't have a plan. Oh yes, I was borrowing conviction. Next time I won't borrow conviction. But if tomorrow all this just turns right back around to green, you're gonna forget about everything you learned. And I think that's the worst thing, because then next time it drops again, you're gonna be like, damn, I wish I would have listened. I wish I would have felt, I would have remembered how I was feeling. So remember this experience and grow from it. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. Don't forget to subscribe. Take care and see you next time.